I'll start by saying I didn't start my career in banking or in financial services. I don't know if that's a good thing or a bad thing. It may be a good thing.
Have regrets? Yeah.
Ignorance sometimes creates innovation. You're able to ask, the simple questions that people don't ask. But I did start my career on the engineering side. I've always loved to build. Then realized I'm interested in learning more about business, so transitioned into consulting, and then found my way into venture capital. I worked in VC between the years of 2010 and 2013, which is kind of considered like the big, first wave of fintech 1.0. A lot of very successful companies, Square and others, started during that time, and really got me excited and interested about the space, and realizing that there's additional opportunities. And I started Bluevine while I was working at the firm that I was working at the time. So, found myself into banking, even though I never started in that space.
I won't ask you if you would have done it any differently, but could you imagine then that you'd be the CEO of a major SMB banking product?
If I would have imagined, the answer is pretty clear, no. 6 months before I started Bluevine, or before 6 months I started Bluevine, I didn't really think that I would want to be an entrepreneur. And so, that is not likely to have happened for me to become CEO of a larger company. And certainly that paved the way. But, something happens when you're working in venture. You get kind of infected from the bug of entrepreneurship.
Yeah.
Yeah, no, absolutely. I mean, you see others doing it and you're like, well, maybe I should jump into the waters here.
So let's talk about Bluevine. Let's talk about what you do and maybe some of the evolution of the company.
Absolutely. First of all, Bluevine provides end-to-end banking for small businesses, really building banking design for them and empowering them, allowing them to focus on their business. We're solving for two main things. The first being that small businesses today, their financial services experience is very fragmented. They're very much underserved with the traditional banking system. And so they need to resort to kind of cobbling together a bunch of third-party services, outside of their bank. And the second thing that we're looking to solve, or we're solving, is really building and designing products that are built for small businesses. Small businesses are a separate segment. They're not consumers. They're not corporation. And we believe that they deserve their own product that fit their need. So we're solving for both of these, really building an end-to-end experience, having all the products and services that small businesses need under one account that magically work together. And these include everything that we believe should be part of banking: checking, credit, lending, payments, bill pay, and there's a lot of other products that we are looking to bring forward in the future. But then really also, in addition to making sure that these products work together, really designed for the needs of the small business, and making sure that they have everything they need to run their business and making their life easier. And so that's kind of what we do. Our journey. We started what I would characterize as the hardest part of banking. We started on the credit side, on lending. Clearly a big gap in the market. Small businesses are not able to access credit or capital or the products that they need. And realizing that that's an area of opportunity, that's where we started solving, really focusing initially on revolving credit. That's where we really kind of specialize. But over time, understanding that this is just one of the symptoms. This is one of the problems that small businesses have. This is one of the products that they don't have access to. But the problem is much wider. And when we envision what would be the way to solve this broader problem, is just build better banking for them as a whole, not build separate fragmented point solutions, but actually aggregate the service that they need and make their life easier, making sure that these products are in one place and work together.
And so you actually that was a segue into another question I had for you. We've heard different perspectives from some of the participants tonight, and that was whether to develop all the products in-house or to be sort of an aggregator of the best of breed services. It sounds like what you just described is that those services that you're describing are designed and manufactured by Bluevine. What's your thinking about that in terms of either partnering to get those services or to creating them yourself?
Absolutely. That's a great question. I think every company needs to ask themselves, what are the boundaries of what they need to own versus what they don't need to own? And I think we're at a period of time where the boundaries of banking are being somewhat redefined. What does banking mean? historically banks wouldn't build a lot of software. And I am firmly in the camp that you should, right? Like the fact that banking is essentially moving money, storing money, and credit does not mean you shouldn't extend out of that and build the software and tools to make that experience more holistic and more seamless. And so, like, I think we're redefining what banking means. And so my general thinking is, first, what belongs as part of these new boundaries? Like, is it in or is it out? That would be the first question. The second thing is, by owning this versus partnering, am I able to deliver a better experience to my end customer? And some of the things that we've built internally, and we've built a lot internally, is because we believe that by controlling the end-to-end experience of these products, we're able to deliver a more holistic experience, and we're actually able to really build and design for the segment that we're serving. Does that mean that we're going to do everything ourselves? The answer is no. For example, we partnered with Next Insurance to deliver insurance to small businesses because we believe that from an overall perspective, delivering that is part of our experience. There is a benefit to our end customer, but do we want to be an insurance company? The answer is no. So insurance is not something that we're going to build, even though we are distributing and delivering that to our customers.
Amazing. And I appreciate that. I remember our conversation with Next as well. What do you see as the biggest opportunities in the space right now after a year that was, saw a lot of growth, a lot of new money in the space, a lot of changes? Where do you see the opportunities now?
Focusing on banking, ever since I'm no longer a VC, my entrepreneurs become very myopic on the industry that they're serving versus other industries. I'll answer that pretty much to connect to the previous question or answer. I think we are right now in the phase that we are all, or companies in our space, are innovating on banking services to small businesses or to other underserved segments. And I think we're at the phase right now where there's a lot of innovation around the customer experience and also the infrastructure side. I think right now we're extending to building the next layer, the software elements here. So if I focus on small businesses for a moment and what belongs as part of broader banking, I believe that, for example, it's clearly that payments belongs as part of banking, moving money, but accounts payable workflows, in my opinion, belongs as part of banking. I believe that expense management is part of banking. That shouldn't be external to your bank. I kind of think about this as we are moving from thinking about banking just as a utility, as a way to move and store money and credit, to becoming more of an operating system where the checking account is like the nucleus of the operating system. But right now we're expanding the boundaries. So I think there's a lot of opportunity to take it to the next step in building software. There's kind of a phrase that was coined, I think, by Andreessen, many years ago, like software is eating the world. And now with embedded fintech, there's kind of the phrase of like every company is becoming a fintech company. I'll kind of bring those two together, which may sound intuitive or not intuitive, but like, in my opinion right now, every fintech company is becoming a software company. Every fintech company is starting to think about, how do I actually build SaaS? What in my product can I actually extend and deliver a better money experience by building software? So I feel like that is a big opportunity for us to take it to the next step.
I like that. And I like that analogy. What do you think about, so this conference has done a good job of bringing sort of the traditional financial industry together with some of the top fintech leaders like yourself. And we have some newer players as well. Like, if you were talking to a new player, I guess looking back at your own experience, what do you think is often overlooked when it comes to building financial services at scale?
That's a great question, and it's one that I do talk with entrepreneurs that come to seek advice and they're thinking about getting into the space. I think there's a lot of focus, which should be, on the customer experience, on the UI layer, on the front, kind of the front end. I would say that in order to really scale banking, it's 80% is like what's under the hood. To really be able to even to innovate and deliver better customer experience to the end customer here. Yes, you certainly want to be able to build features and you want to innovate on the UI layer, but there's a lot that you need to do to be able to actually deliver a better experience. A lot of investment around infrastructure, around your data models, around your risk management, things that may not seem the most sexy, but actually are vital in order to deliver that comprehensive experience. When you look at the traditional banking industry, part of the limitation for them is many of them are system integrators. They basically buy a lot of systems, which they patch together. They buy from FIS or from Fiserv or from TSYS. And so, I think that kind of limits their ability to really end-to-end change the experience, because there's only so much that you can do by innovating on the top of the stack. To really be able to completely reimagine in some of the flows and some of the experience, you need to go down. You need to think about infrastructure and data differently. And so, I think somebody coming new to the space may think, I need to create a really great mobile app or a really great UI. Yes, you do. But there's a lot that you need to invest under the hood that maybe is not seen from the outside in.
Awesome. I got a little distracted. We got a listener question in, or attendee question. It's not necessarily germane to what we're talking about right now, but do you see a lot of declines? Are there a lot of loan applications that come in a decline based on a business or business owner credit?
Do we see declines? We see declines. I won't get into the exact ratios here, but do we see declines? Yes. Ultimately, every credit provider, whether it is a bank or a non-bank or an online lender, like the way that we started, you have your credit box. There is a kind of a credit profile that matches your underwriting models and so on. That could be, in our case, the size of the business, the cash flow profile, the credit profile. And so ultimately, sometimes there is, we get a lot of businesses that may not fit the profile. For example, we sometimes get a lot of newer businesses that there's just not enough history for us to be able to underwrite. Part of the rationale, by the way, for us to get into a broader set of products from banking to bill pay to others is to be able to onboard some of these customers that we may not be able to offer them credit right now, but by having them start using our services, that gives us a better position to be able to give them credit in the future. So it's not something that is unique to Bluevine, but by having a broader set of product actually allows us to serve better and even provide more access to credit in the future.
Great. And we've heard that from a lot of CEOs and heads of banking and lending during this program. Let's talk about building a bank. What are the opportunities and barriers to building a bank? You've been going through this. This is sort of the natural evolution of your business. Let's talk about that.
Absolutely. So maybe let's start with the opportunities.
The good stuff first.
The good stuff first. First, this is going to be clear. This is a massive market, banking. Okay, TAM is $800 billion. It is absolutely huge. Banks do a good job serving their most profitable segments, corporations, prime consumers, and so on. But there are enough segments in enough unique circumstances where banks are just not investing there. And again, it's not irrational. They invest where they are making the most money. And so there's still a lot of pockets of opportunities to be able to innovate on and deliver a better banking experience that small businesses or consumers or any other segments right now are underserved by the traditional system. I think and I mean by that, tech companies or startups, many times we really focus on the competition that is sort of most vivid to us. We're thinking about other startups, or we're thinking about other tech companies. That is not really the competition in the space. People forget, there are the 800-pound gorillas. There is Chase, Wells, BofA. Those are the real competition. And then you have 4,000 banks, okay? And, the way that I'm looking at this, we're only scratching the surface. Fintech as a category in the banking space, challenger banks, a couple of percentage points, in terms of market share, we're really only scratching the surface. So there is just a lot of opportunity here to be able to build a really large company in a lot of underserved pockets that I think are wedges in order to build interesting products and services. Now to the barriers. It's an interesting time, and I'm going to say something that, again, may sound contradictory. It is probably the easiest time to start a banking startup, but the hardest time to scale. And I'll explain what I mean by that. Today, you have a lot of tools and services, whether it's banking as a service or sponsor banks that are very eager to help startups get into the space. Today, launching a checking account with a debit card, you can do that with 3 months of work. Really quickly launch that and be in the market. However, the analogy that I would use here, this is like, what you need to do to start running. Yeah, you can buy a pair of sneakers and shorts. What it takes to be a world-class runner, very, very different. Very easy to start running, very different to be a world-class runner. To really succeed in scaling banking today, there's a lot that is needed. First, because of competition, both from the traditional banks, but also from upstarts and startups, what it takes to win here is like a debit card and a checking account is like step zero. Okay, like really, it's like that is not banking, a debit card and checking account. The completeness and robustness of solution that you need to be able to deliver here to really compete and differentiate in the market is extensive. Like you need to do a lot from a feature complete perspective, from a customer experience, from a servicing. There's a lot that you need to build here. And then it goes back to the point of before. The customer experience or the user interface is only a small part here. You need to build massive infrastructure, risk management, compliance, servicing. We are, as a company, we are 500 people. We're deploying tens of millions of dollars, and all we're doing is building, for banking. And we have an 80 people support team in Salt Lake, which is growing by tens of people, every month. And so, like to do this at scale and to be able to deliver a really competitive solution that is competitive in today's market. Like the gap from starting to really competing and really delivering a comprehensive experience that you're able to win, there is a massive gap, okay? And so I'm not saying that there's no room to compete. There's certainly room to compete, but I would warn anybody that has the illusion of thinking that they will be able to launch a checking account and debit card that takes them 3 months and really make a dent in the market. I would really advise against this. This is a market where you have companies, I'm not talking about the banks, I'm talking about other companies that are going after this space, the startup, that are deploying hundreds of millions of dollars and are really, really investing here to be able to really create something unique and to be able to make a dent in this market.
Well, you just burst my bubble. I'm no longer attaching myself to the dream of launching a challenger bank for washed up collegiate athletes. So much investment poured in to the fintech industry in 2021. I think it was double over the year before. What does that mean for you guys? You talked about the investments that you're making across all the different parts of Bluevine.
Absolutely. I'll first describe the situation right now. Certainly the markets are hot, and fintech is doing very well, right? Like in terms of investments and investor appetite. I think generally this is good news for end customers, right? You're getting more innovation funded, companies are able to invest. And I think that, translates into companies pushing harder to deliver a better experience and service to the end customer. Certainly it makes us more aggressive and more competitive. We're looking over our shoulder, like who else is doing what. And so I think it's a great time for the space, and it's a great time to be a segment that has been potentially historically underserved. Now everybody is trying to serve you better. For us as a company, it doesn't make a huge difference right now. We are very well capitalized. And so, our pace of investment is very high. We are certainly doubling down. We have probably something like 60 jobs open right now. That's a completely, different topic. It's very hard to hire these days, but we are hiring like crazy. We're building many, many, many things. And I think it's an exciting time. Whether we go out to the market to raise, we may, opportunistically, we don't need to, but we may take advantage of the market that is good.
Great. And one of the things I've appreciated about our conversation right now, Eyal, is the fact that you're focusing on entrepreneurs in the space. What would you give advice to those entrepreneurs that are thinking about moving into banking based on your experience and what you know?
Yeah. So we started by saying I'm not a banker. I didn't work in banking. I didn't work in financial services before starting Bluevine, unless you consider venture, which is, I wouldn't necessarily call that financial services or traditional financial services. I think that shouldn't be a limiting factor or a barrier to get into the space. Now, entrepreneurship, people come from different backgrounds, and I think if you have that bug and you have that hunger and you see an opportunity to make a better world, a better financial world, then by all means, I think there is a lot of opportunity left. And I would encourage folks that are passionate about this space certainly to jump in. The second point that I would say is, you said that I discouraged you to get into banking. That wasn't the intent. The thing that I would say is just come in with your eyes wide open. Financial services are hard. Fintech are hard. It's a lot of work. This is not a side gig or a side hustle. What I think makes companies in our space execute really, really well is they're able to build this very complicated machine that has a lot of moving pieces, whether it's product, technology, risk management, compliance, data. There's a lot of things, a lot of moving pieces, but they're able to execute and actually make all these things work in lockstep. It's like this, very complicated Swiss wristwatch, where it takes, a lot of work to make this actually work. It's not just about getting a recipe. And so, again, anybody that is excited about the space, I encourage them to get in, realizing this is not easy. It's not easy to scale this type of business, but you know what? Things that are worthwhile are rarely easy. So I think, if you're passionate and you want to get into the space, then I'd be happy to speak with anybody that's interested and dispense my 2 cents.
Totally true. We have time for one last question. I want to ask you, Eyal. Oh, we have a question that came in from the crowd. This is from Trevor Gosling. Have you been able to migrate your initial credit-only customers to your banking activities?
That's a great question. A big focus for us right now as a company is connecting all of these dots. Mm-hmm. We started on the credit side. We've built our checking account 2 years ago. We've built bill pay on a separate platform. And so from the customer experience, all of them are integrated into one account experience. A investment for us in the next 6 months, a lot of this is connecting the flows. Is okay, you came from banking, we'll give you credit. You came from credit. We want to make sure that you're able to have a continuous experience with us and deliver a better experience by having checking with us and bill pay and so on. We have some cross-sell or some attach already, but that is certainly becoming more and more of a focus and a theme for us, thinking about the entire customer journey, not just the different products. We have that from a platform perspective. Now it's really thinking about it from a customer journey, from a communication, from a marketing, from connecting all the product flows. We have all the pieces. Now it's really about connecting them.
One last question came in. This one time from Robert. Do you fund via the ABS market?
We have not funded through the ABS market. We have gone through ratings. We do have both on balance sheet and off balance sheet capacity, but we've not gone through the ABS market.
Great. Eyal, it's wonderful catching up with you and hearing all the great advice and discouragement to get into bank. I'm kidding. But thanks for joining us here at the Big Bang Theory Conference. I appreciate it.
Thank you. This was fun. Thanks again for having me.